The big headline right now could come from the FOMC, and we are standing by for this, for the decision that they make on the interest rate and any kind of moves on that. The Fed is most likely expected to cut rates for the third straight time, this time by 25 basis points. That seems to be the consensus view. That's about 0.25%, but this could also be the last cut for a while because too many cuts may overheat the American economy. Therefore, policymakers, they are cautious. Inflation is still sticky over there. Key data missing after the government shutdown. So what else should you watch out for in this FOMC meeting? What will the Fed announce for that? Let's go across to my colleague, Jasmeet. He's standing by with perhaps a curtain raiser, a preview of what we can expect. Jasmeet, how does that picture look?
Fed rate cuts are in focus on the back of the December meet of 2025. Well, what to expect is the Fed is expected to cut the interest rate for the third time in a row. And the market is expecting a rate cut of 0.25%. That's 25 basis point in this particular meeting that's happening on 9th and 10th of December. While the rate cut this week may be the last one for a while, given that many rate cuts could push the economy too hard. So there can be a pause in the rate cuts going forward after this one. While if you look at the overall outcome, which influences the global market, currencies as well as the equity flows, given a lot of currencies all over the world are in US dominant currencies. So they are going to have impact, and that will be a wait and watch of how the new Fed rate cuts, or if they are Fed rate cuts, how will it impact the overall markets going forward. Now, in terms of the Fed leaders, they are split in between the decision as the inflation still remains a key sticky point. Given on the back of the US shutdown, we have seen that data received was on a lower base, and we got a very slow data to gauge the overall picture of the wage hikes and overall the labor movement in US as well. So that will something we watch out for. Now, in terms of the inflation is showing a steady cool given the early starts of FY 2026, and what we see is this gives policymaker some breathing room upside if the inflation comes under the suitable radar. So all in all, we see a mixed picture as of now with regards to the US inflation as well as the labor costs and labor rates. But all in all, we see market is expecting a rate cut to go on for this particular meeting that's happening on 9th and 10th of December.
Well, that's what the markets are expecting, Jasmeet. Let's connect with Peter Cardillo of Spartan Capital. He's joining us right now with his expectations. Peter, where do you see the rate cut happen, if at all? Is this a certainty, or you think there is a realistic chance that the Fed may hold fire?
No, I think they'll cut by 25 basis points, and I think the market has already discounted that. However, there are two scenarios with this afternoon's announcement, and that is that, we could have a dovish statement, which I believe we probably will get, or the other one would be where we get a hawkish statement that would indicate that the Fed is likely to take a pause, at least in the first quarter of 2026. That, I think, would be somewhat negative for the markets. The markets, I don't think, are expecting that. And so there's a good chance that there might be a surprise. I don't think that will happen, but that surprise does exist.
But, Peter, a rate cut could weaken the dollar and benefit emerging markets with the kind of global uncertainties we have, whether it's on oil or geopolitics or forex volatility. How risky or rewarding do you think any kind of chase yield into the emerging markets could be right now?
Well, I think it'll be helpful to the emerging markets. It's obviously going to be helpful for the U.S. markets. Obviously, it's going to give relief to the consumers to a certain degree, and so anytime the Fed cuts, it's always a positive, and especially for the emerging markets. And one of the things that we've been seeing here lately is that there's been a rising yield factor across the globe. And it's basically showing up here in the States as well. Just about a week ago, a little over a week ago, the 10-year note was under 4%. And now it's at 4.18, got as high as 4.19 this morning. And that's because we're seeing a constant uptick in the Japanese yields and other yields around the globe. And so, the markets might be dictating something different than what the Fed might want to dictate to the markets.
But how likely is it that this kind of rate cut could trigger a renewed flood of foreign capital into India? Or do you think the trend of FII outflows already is too entrenched right now?
Well, India is a special situation nowadays in the sense that, we still don't have a trade deal. And we've seen your prime minister get very close to Russia, to Putin. And so, there could be surprises from the White House on either side of the equation. I'm not sure just which way they'll be weighed, but certainly, in terms of outputting, I think a rate cut could be helpful.
What about a dollar softening? Typically, it supports emerging market currencies like the Indian rupee. But do you see the Fed rate cut helping stabilize the Indian rupee right now, which has been under pressure? And we've seen a depreciating Indian rupee.
Well, as far as the dollar is concerned, I think we could have a little bit of a dip, but not by much. Again, what we're seeing here is a divergence between global yields that continue to move higher. So if that continues, the dollar should basically stay stable, and I don't see much movement against the Indian currency.
So how much should investors take the Fed's guidance? Should it be taken as gospel, or is there a risk that markets are overreacting to rate expectations going ahead from here even?
Well, this time around, it's a little bit different, in the sense that we had a shutdown, the longest in history. It certainly had a negative impact on economic activity. And so the Fed is in the dark, just like everyone else remains in the dark until we get all the full back macro indicators. And so I think, they can say one thing today and maybe a month later change their mind. But generally speaking, unless there is some sort of, unforeseen real negative news or positive news on the other side of the equation, whatever the indications are, they usually remain until something of great importance, either negative or positive, happens.
Yes. Well, we'll know the outcome of the Fed's policy decision later tonight here in India. The announcement comes around 11:30 p.m. Indian Standard Time. And then, of course, we are watching out for what Chair Jerome Powell has to say at that press conference. It's going to give markets the biggest cues on the rate path ahead. But Peter Cardillo of Spartan Capital, thank you very much for joining us, for breaking this down. And, of course, the Fed's next move is going to be something all of us globally are going to be watching out for.